Hello, welcome again to the Margaret Thatcher Conference hosted by the Center for Policy Studies. I'm Kate Andrews. I'm the Spectator magazine's economic editor, and I'm going to be your chair for the next hour for this session, Building an Opportunity Economy. If you're a political junkie, it's been a very exciting week for you, specifically the past 48 hours. But in truth, when it comes down to what people are thinking about on a day-to-day basis, we know that that comes down to the economic problems that this country and internationally so many people are facing. The UK is becoming an outlier on its headline inflation rate. Core inflation, which excludes energy and food prices, has actually been rising on the month. We're virtually looking at very little, if not any, growth this year. The forecasts range and people make a lot of it in the headlines, but the truth is they're all at the moment roughly saying the same thing, is that we're going to see very, very little growth. Interest rates continue to rise. The expectation is that they could come closer to 5% now, which could put millions of people's mortgages in jeopardy. And of course, amongst all of this, we're dealing with an ever-growing state. We're dealing with more and more resources being taken up by the state, which brings into, I think, perspective our big question today about how we're going to build that opportunity economy when so many of those opportunities, so many of those resources appear to be vanishing. We have a wonderful panel for you today to discuss these topics. Chris Hayward is the policy chairman for the City of London Corporation. Andrew Griffith MP is the economic secretary to the Treasury and city minister. Tracy Blackwell is the Chief Executive Officer and Director for the Pension Insurance Corporation, and Torsten is the Chief Executive of the Resolution Foundation. I'm going to ask all four panelists to do very brief remarks, and then we're going to dive into a conversation. There isn't going to be any Q&A. There's so many of you, it would be very difficult to get around to all of you. But I will say this is being live streamed, so please be aware of that. And it's nice that we're joined by people in their office at home as well. So, Chris, I'm going to start with you just to give a few introductory remarks.
Okay, well, thank you very much indeed. And I'm conscious that you've all had to suffer me once already today, so I'll try not to repeat too much of what I said in my opening address to you this afternoon. But I think if I had one thought about this topic and about the future, is that at this time that we face with an election in a year's time, the world is looking to the United Kingdom to redefine itself. And there's an opportunity for us to do that, and I think this government is grabbing this opportunity and is taking us forward, because we need to build on our strengths that we've had for many years in the United Kingdom for the good of the United Kingdom economy. And I think that the United Kingdom economy is desperately in need of growth. More than anything, economic growth should be our focus. We've had 15, 16 years of practically non-existent growth. So we need policies, ideas, thoughts that drive economic growth. And when I spoke to you a little earlier, I was talking about how financial and professional services in the United Kingdom, they generate over £278 billion in economic output annually. And I made the point then as well that 2.3 million jobs are employed in that sector. It's a phenomenal presence in the UK economy. And to that extent, I think financial services underpins absolutely everything we do in the United Kingdom. Every transaction and trade, they pay every meal, deal and mortgage across every town and city in the country. So I do think that the United Kingdom's position is under challenge. We've got challenges around tech, we've got challenges around talent, new markets and new products, but we are more than able as a nation to rise, I think, to these challenges. I think we are past the recent economic turmoil that we saw last year, and this government team that have the privilege of the City Minister being with us today, I think is really now grasping the opportunity of rebuilding the confidence in the UK economy, which is so fundamental, for me at least, to our success. And I mentioned, but I come back to it finally, and then I really will shut up, that we need a roadmap. The financial service sector needs a roadmap that takes us to 2030 and beyond. As I travel around the world and I look at some of our competitor cities, they have very clear vision, strategic vision, direction about where they want to take their financial services sector. I don't see that in the United Kingdom at the present time. And so we're doing this piece of work, as I said earlier, Finance for Growth, which is sector-led, which will set out to policymakers. Here are our recommendations, the sector's recommendations. What we're doing in the City of London is using our convening power to bring the sector together, about the ideas for keeping growth and a growth engine to our economy for the next 10 years plus. And then I think we are fit and able to take on any economy in the world and to win.
Thank you so much, Chris. Andrew.
Yeah, thank you, Kate. Thank you, CPS, Lord Spencer and Robert, for having me here. It's always a delight to be at a conference entitled the Margaret Thatcher Conference. She was a great beacon of hope. She took an economy that was not growing as fast as it could, that wasn't delivering its potential for so many human people, and the changes that she made in terms of trying to create the right fiscal environment, a real supply-side revolution, removing layers of a moribund state, helped give so many people opportunity. And opportunity, Kate, is the theme of today. And before I talked about, Chris did a very good job about talking about the absolute vitality of the agenda of the financial system. I just want to talk about why it's so important to everybody. Well-delivered enterprise economies, by their nature, give people opportunity. They allow people the access to credit to do that wonderful thing of take your future expectation of earnings and turn that into a ladder of opportunity today, whether that's getting a foot on the housing ladder for the first time, whether it's later in life making provision for your family, for your longevity or your infirmity, as we go through societies that deliver a much higher standard of living. And all of that is based on markets working well. And one of the great the passion project, if you like, of my role, having joined from the private enterprising part of our economy, where I worked for 27 years, just more than 27 months now in government, is to do what I can to really unleash free enterprise and make markets work well. Now in the city, what we're trying to do is make the really important market of capital flowing around the system, whether that's giving capital to young entrepreneurs. The Chancellor is leading a lot of work on how do we get the right pathway from seed to scale up to the very largest forms of capital through reforms of our public company environment. How do we make London and the United Kingdom the best place in the world to start, grow, run and scale a business at every part of its life journey? And the way we're doing that, Chris knows much more of he knows more of the detail than many of you. I think I probably live and breathe the detail every day. Is through a mechanism of taking back control of our financial services rulebook, a sector that touches every part. It's not just about the city, it's not just about the jobs, it's about the tax. It's about the wonderful things that well-ordered financial services can do for everybody. They touch the lives of every citizen in this country. And we've now got, for the first time in a generation, the chance to take back the rule book. We set many of those rules, but we've got the chance to take back that rule book, to modernise it for the world we live in, the world you heard a little bit about earlier from the Secretary of State Keegan, about the world of artificial intelligence, of changing careers, of changing life habits, and this very competitive world that we live in, where many aspirant societies seek to build their own wonderful financial centres. Just look at the building around you, look at the pedigree, look at the history. Now, all of those natural advantages that we have remain. The common law, the English language, the unbroken transition of power, the entrepreneurial ability of the British people, all of those remain. But our job as we go through that important exercise in taking back control of the rule book and modernising and reforming that rule book in a way that I think Mrs. Thatcher would have done, or probably one of her wonderful acolytes, Lord Young, who many of us were privileged to attend his memorial last week. That's the job of work that we've got to do. I'll stop there, Katie, but it's an incredibly important piece of how we take forward our society and how we deliver that opportunity economy for the whole of the United Kingdom.
Thanks, Andrew. Tracy.
Great. I'm going to talk about pensions. Don't roll your eyes, it's okay. But how we are investing our pensions and our savings are really a microcosm of what's holding back the economy, but also can give us a glimpse of how we support our future economy. So I think it'll be a useful example. So currently not a day goes by without another article in the papers about how pension funds, insurance companies, individuals through their DC schemes can invest more in all the things that Chris and Andrew were talking about that are absolutely essential for growing the economy. And that's absolutely right. A lot of people are looking at lots of different ideas in order to reform and think about how we do things differently. Great idea. Some of that talk is about super funds, about amalgamating some of this amazing amount of savings that we have in this country to invest in stuff. And that's all great as well. It's slightly the new magic money tree, though. The thought goes, if we can just use more of this money to fund this stuff, then it'll all be great and we can really build the future economy. So what's stopping everyone from investing this bounty? It's an absolutely legitimate question to ask. We need to ask ourselves why people aren't investing more in all of this growth opportunity and how we get this capital moving. The uncomfortable truth as an investor is that the attitude to risk and risk aversion in this country has become endemic. Institutions and regulators and individuals have become incredibly risk averse. The financial crisis left very big scars on this country, not just in terms of regulation, but also in terms of people's psyche. And that is something that needs to change. I know the minister wrote very recently about this, and I think it's absolutely crucial to get things moving again. Interestingly, we already have a super fund in this country. It's called the Local Authority Pension Schemes, Local Government Pension Schemes. If you put all of these together, they would be £400 billion thereabouts, which is the size of the largest Canadian fund. The difference is that they invest 5% of their assets in things like fintech, private equity, venture capital, etc., where the Canadians invest 35%. It's an enormous difference. It's that attitude to risk that's holding them back. On the other hand, we now have DC and auto-enrollment. So people are automatically invested through their payroll savings into their defined contribution pension scheme, which is amazing because that is really giving millions of people a stake in society for the first time. They have their pension pots. It's up to them how they want to invest it. And they do hire external people to invest it for them. And that's a great thing. So millions of people now have a stake in that society. However, again, there is some scale in that. There is probably some more potential for more scale. But the largest one is about £30 billion. And again, they underperform their counterparts in Canada and Australia because they're not taking enough risk. Again, risk has become endemic. So maybe scale isn't the problem. Maybe we need to change people's attitude towards risk. The second point, and actually possibly the more important point, is that capital is global and it's mobile. We seem to have forgotten that as a country. If you put windfall taxes on companies, raise tax rates to the highest rates in 70 years, make planning permission almost impossible, then guess what? Investors will choose not to invest here and choose to invest in other places. An example, I'm chairing something called the Purposeful Finance Commission, which is about bringing local authorities together to trade ideas on what works and what doesn't in terms of local development. Some examples that are coming out of the roundtables we're having are about how if you take the price of a building project for, say, new apartment buildings, 80% of the cost is going to planning and 20% is actually building it. That is the wrong way around, and we need to urgently look at all of that to see what can be fixed. So if you want to build an economy that's open to everyone, that incentivizes people to grow, start businesses, grow businesses, which by definition is risky, give everyone a stake in society, then you need to recognize that investors aren't just some nebulous someone out there, it's all of us, it's all of our savings, that we need to take risk. That we need to attract capital, that it's competitive, and that you need to make the UK an attractive place to do business. So there's two very uncomfortable truths. One is that you can't have return without risk, And second is that attracting this capital is competitive, it is global, and we need to get on top of that, because if we don't, nothing's going to get better.
Thank you very much, Tracy. Torsten.
That was a bit depressing.
Sorry.
Thanks for that at the end. I thought you were going to give us an uplift, but no, it was just grim.
Sorry, I apologize.
Right, I thought I would not talk about specific sub-bits of the financial service sector, but instead just offer some reflections on what opportunity in Britain in 2023 feels like, what maybe some of the lessons from Margaret Thatcher's attempt to instill more opportunity back in the 1980s was, or what the Conservative tradition more generally could have to offer in the face of some of the big challenges the country faces. Because, you know, the opportunity the punters have right now is to spend more in the shops to get the same as they were getting a year ago. That's what the highest inflation in 40 years means. Some of the UK exceptionalism about that debate right now is a bit overdone. Across Europe, we're seeing similar trends happening, particularly on food and energy prices, but the challenge that that's meaning for people isn't overdone. You know, we're seeing 1 in 6 people reporting now they're skipping meals. We're seeing 1 in 20 saying they're visiting food banks. That isn't what success looks like. That's the acute end of the crisis. I think the question we should all be thinking about is, why is Britain finding that so hard to deal with? And there, I think you've got to not look at exceptionalist things about Britain being particularly hard hit this year, but instead ask what's the deeper crisis that's making it hard for those people to deal with that. And the underlying truth is, the answer is because the average Brit is now 16% poorer than the average German and 9% poorer than the typical French person. Poorer households suffering shared shock of higher energy prices and higher food prices, finding that harder to deal with. And you know, this is the Margaret Thatcher conference. I don't think she'd be very impressed with that being the result. That wasn't what she thought the aim of the game was. And there are other lessons from Margaret Thatcher about what trying to deal with that situation is, which is, you know, clarity about the objectives, as then ending relative decline for Britain, the stagnation of the last 15 years, half the productivity growth of the rest of the OECD. That's the objective. Clarity about the methods, and being hard-nosed about when someone's telling you that they've got an answer. Is it really? Is it plausible? Did anything actually happen, or did it just get announced? You know, there's a woman that was clear about the change that was required, clear about how it went with the trend of other changes in society. Whether people think that she went too far or not on the decline of manufacturing, she was clear about the wider economic trends that were driving the change that she then accelerated, clear about the role of freedom and opportunity, and about taking on vested interests sometimes when that's necessary to achieve those objectives. Is it clear that we're a country that does that when it's necessary today? Now, why then did she win, given that she took on vested interests, upset a load of people? Lots of people's memory of the 1980s, for good reasons, is the very high unemployment, the 3 million that lasted well into the 1990s. And when people say that, obviously the first thing you will say to them is, she won a lot of elections, right? And then the question is, why did she win lots of elections? And the answer is basically, in simple terms, strong income growth for the middle and the top of Britain. Yeah. And even though inequality was rising in the 1980s, as it was, which is the inequality we live with today, public concern with inequality didn't. When do you actually start seeing the rise in public concern about inequality and poverty? Not in the 1980s when inequality went up, but in the 2010s, after the financial crisis, when income growth stopped. That is when public concern goes up, and has stayed basically there ever since. And it's done that because, as I say, half the productivity growth of the other OECD countries, our productivity gap with France and Germany has tripled in the last 15 years. Other good things too. Employment rate's grown faster than France here, significantly over the past 15 years, but the productivity gap has tripled. It's not gone up a little bit, it's tripled. That's why British households are poorer than their French and German counterparts. When people say they want degrowth or growth doesn't matter anymore, they're talking nonsense. The reason wages have not grown in Britain between the financial crisis and the pandemic is weak productivity growth. It's particularly acute for younger adults, because if you're entering the labour market at a period of stagnant wages, you bear the brunt of that. And remember, income might not be growing, but wealth has been, which helps those who already have wealth and not those who would like to acquire it. People becoming 30 during the 2010s have half the home ownership rates of those becoming 30 in the 1980s. Right? That isn't what success looks like. So the question is, Is there an answer to those challenges from a conservative tradition? We've heard some contributions on that, but big picture, are there conservative answers as opposed to other answers that you might find less appealing, which I promise not to go into today, because that will go down badly. I'd like to get out alive. It's a long day. So, yes, being an investment nation, not actually just in the 2010s, but for the last 20 years, this country has not been investing private sector investment. Public sector investment hasn't been happening properly since the 1990s. We don't invest in our future, we've been living off our past, and that requires deferred gratification, not just the promise of tax cuts and happy days tomorrow. That's investing today for a better future. It's not just telling you can have it all easy. That's definitely what Margaret Thatcher would have told you. Is that what you always hear today? No. They're tough choices. An ownership nation means prioritising future potential owners, outsiders, not just today's insiders. But we've just caved hook, line and sinker on the planning bill and building enough houses, which is what those outsiders, or younger people as we call them fashionably, need. The social mobility, in a world where wealth is higher relative to income, which is where we now find ourselves, that's what lower interest rates than we had in the 1980s means, then family wealth is more important in determining where you end up. It determines where you can live and the jobs you can do. Conservatives should be worrying about that, but that requires being on the side of those without, not the side of those with. I think that's where Margaret Thatcher would have been if she was here today. Then on trade, it has some benefits, which Andrew talks about a lot, but I promise you, I do lots of things with lots of different Conservatives. It's not clear to me, actually, people want trade in a way they want to. John Redwood the other day told me that trade's actually not even a good thing, which is definitely not where he was when he worked for Margaret Thatcher in the 1980s. Large markets are important. That's how you get to efficient scale in producing and selling. It's how you become a rich country in a globalized world. You cannot be a closed-bordered country and be rich in the 21st century. And then on growth, Andrew's rightly talking about the role of financial services. It's really important because Britain is the second biggest service exporter in the world, which almost never gets celebrated by any political party. Both main political parties talk as if the return to manufacturing spreading across the country is somehow about to happen. It's not. When they talk about bringing jobs back to every single part of the country, or they talk about small parts of the economy, fintech, but not enough about the wide cultural economic services we face. So broadly, to wrap, the public aren't that complicated. All of the culture war nonsense, woke, not woke, forget all of that. They basically want what the non-woke lot wanted before, right? Prices under control, a decent job, somewhere to live, and some security to bring up their family in it. And achieving that means valuing opportunity in the broad senses of, yes, being able to afford your family's living standards today, but being able to plan a better future. And there are conservative answers to those, but they're harder answers than the ones we sometimes pretend are available today. There is no tax cut, happy days today answer to a more opportunities for Britain tomorrow. And until that's wrestled with, you won't have the answer.
Thanks, Torsten. I want to jump in by quoting the Prime Minister and the Chancellor in things that they've said over the past 18 months. They haven't been in power for very long. It's been less than a year. But if we go back to February 2022, in Rishi Sunak's Mace lecture in the city when he was Chancellor, he did a very eloquent speech about bringing in the culture of enterprise. He said lots of people are asking, is this big state agenda that's been ushered in with COVID the way of the world now? And he said, no, I don't want a culture of the state, I want a culture of enterprise. On a similar note, we have Chancellor Jeremy Hunt talking constantly about creating Silicon Valley in the UK. And I believe he's even set to make some comments on productivity, Torsten, which you were speaking about, here at the CPS later today. I'd like to know from our panel, and Andrew, I'll start with you. It hasn't been that long, but arguably the country doesn't have that long. It has been through such crisis. It is struggling with record high inflation rates. People are really feeling that economic pain. What policies can we point to so far where we can see the Tory government ushering in this culture of enterprise, the Silicon Valley of the UK? Alternatively to my panel, what are we disappointed by? What aren't we seeing? What should we be seeing if they're really serious about this commitment? Andrew, I'll start with you.
Yeah, thank you, Katie. And look, thanks for recognising, and Torsten did as well, the exceptional volatility that we've been through. I mean, there's too many, I'm not someone who conducts debates at either extremity, and there's too many debates, particularly in Parliament, where, one side of the House will talk about the economy for 3 hours without once mentioning COVID or Ukraine, and you've just got to root whatever conversations we have in context. Strategy is about what you choose, to do and what you don't choose to do, and where you spend your time. And if I look at the strokes that have been played within a very limited financial tolerances in the autumn statement in particular, if you look at something like, if you want reasons to be cheerful, friends, if you look at something like the abolition of the pension lifetime allowance, right? That is an absolute strong conservative policy. That is saying that the state will not artificially cap your ability to provide for your family's retirement. It's something that goes back to the intrinsic human nature, the desire to create opportunity for oneself and for others. It's scrapping a tax, if you like, scrapping the penal rates of tax. It's restored what Tracy talked about, which is the UK status as the second largest pool of private pension capital on the planet, from which there's work to be done, but from which good things can flow as we try and get that capital flowing around the productive parts of the opportunity. Tracy's done a lot of work on the Regulatory Review Commission, I think it's called, around how do we, go through steadily, sector by sector, and look at some of the ways that we can do that. And actually, that's good for young people. It's good for young people trying to get on the housing ladder, because where was that capital going, right? If the state was penalising people with artificially high rates of tax, of confiscatory tax rates, if you dared to save too much into your pension, and this affected the public sector at least as much as the private sector, right? It was bad for the productivity because it drove experienced executives out of the workforce, both public and private sector. And it was bad for society because so much of that capital, and the CPS has done fantastic work on the housing market and tried to bust some of the myths, that capital went and expanded the buy-to-let housing market. And so what it did, and it was cheap, because as we know, Katie, we've been through a period of an abundant cheap capital, but what it actually did was distort generationally the housing market for the next generation. So that was an absolutely good conservative policy. It was fully in the lines of the sort of reforms that I think Mrs. Thatcher would have looked at that problem. It was politically brave, if you like, because Torsten and others were shouting at the rooftops that that wasn't the right policy, but you've got to make these value judgments about where you stand. And the bigger prize of fixing our pensions market, putting that capital back into productive uses rather than having it squeeze out the sides in things like housing market. And finally, let me chip in one more thing, Katie.
I have a quick question for you.
I'm going to
let Torsten come back on pensions in a moment, but very quickly, just to challenge you on housing there, Andrew. It's a little odd, right, to talk about housing. It's a little odd to talk about housing. If you're promising the Silicon Valley of the UK, where are all those people going to move to in Oxford and Cambridge when you can't build a single home there? And the Tory party very recently has made it even more difficult to do so.
Well, I said I'm not. I mean, we can come back on housing another day, but I'm not at either extremity.
It's a big part of economic opportunity, I think.
Hey, we'll bring it on. You're just going to have to clear your agenda because this is a complex and multivariate problem, right? So you've got the cost of capital. You've got the access to capital, which is the financial regulations that we all collectively in society put on banks to lend money and who they lend to, which, as Tracy said, is a function of risk. You've also got how do you control your borders? So one of the multivariate factors is the number of people coming in and leaving a country, because that drives the demand for the housing stock you've got. You've got the issue I talked about pension capital, about, generationally some people, choosing to put housing as a store of wealth, which again is driven by the relative ease of investing that elsewhere. You've got the decline of, I told you, you're going to go a long time, right? You've got the decline of individual investment in stock markets.
You've got 20 seconds left, and then we're going to Tracy.
One of our objectives is to go back to getting individuals to be able to connect with stock markets, with our wonderful companies, not just those that are listed, but also those on early stages. So when we talk about housing, it's a complex and multivariate problem, and we're sitting here in London, in Greater London, where the gap between the demands for housing and the ability to build those homes is the widest of anywhere in the UK, and that, you can't pin on the government. I don't want to make trite political points, but you can't pin the failure of the Mayor of London to build homes here where we need them, where there are 7 teaching hospitals, 5 Premier League clubs, an infinite amount of jobs, more vacancies than any other district of the entire UK.
I think it's reasonable to say that there are multiple culprits here.
If we want to solve housing, it has to start right here in London.
Let's move on to Tracy. Torsten, don't worry, you're going to get your say too. But Tracy, I'd like to know your thoughts on this.
Well, just back to the latter point. So it kind of comes back to my 2 points. One is the regulation overall in the country, which is not fit for purpose. It doesn't mean we don't have some very good regulators, and it doesn't mean that it is a bonfire of regulation. It's making regulation fit for purpose to support the economy. And it is absolutely clear that that isn't happening. I'm chairing something that Andrew referred to, a regulatory reform group, which is looking across regulators and just looking at the system as a whole and how it works. And the answer is it doesn't. It's incredibly risk averse. It has no objective to support growth, and it acts as a barrier in all sorts of other ways. Then when it comes to, and housing, I'm afraid, is kind of at the center of a lot of this. Andrew's absolutely right. There's very little central government can do. We invest a huge amount across the country in various infrastructure type projects, whether it's social housing, renewable energy, etc. And the problem is it is at a local level.
Recently blocked planning reform at the national level.
Sorry, say again?
Recently we've had planning reform blocked at the national level.
No. That's, Katie, that framing is not right. There's a very significant body of reform.
A lot of power is given to local councils and the rest of it to block essentially anything they want. A lot of that can certainly be challenged and changed by MPs, and it's been decided that there just isn't the political will in the Tory party at the moment to do it. Okay, perhaps we will have to come back to that.
It is too simplistic. You should invite the brilliant Secretary of State for Housing and Local Government.
I'm sure the CPS would be delighted to.
But the reality is,
even
under the current package of housing measures, the nation isn't and has not built the homes that you need. So if as part of a nuanced package of reform, actually, by going with the grain rather than against the grain on things like brownfield first, on going up, not out, actually you could end up with more homes and more of the homes that the nation needs.
It's a bit odd for a Tory government to have promised to build 300,000 homes a year and have failed to do that essentially every year, and then to say they can't actually do anything about it. The promise was always moot. Back to Tracy.
What we see, it comes back to culture. It comes back to a risk culture and getting that throughout the country. So up until the most recent government, there wasn't an acknowledgement of all of this. There wasn't an acknowledgement even that a lot of this was broken and wasn't working and we weren't creating this culture. And I would say that this government really is trying to make some of these reforms, but they're very deep cultural problems that go back not just to the financial crisis, but before the financial crisis. And if we're really going to get that culture of enterprise and opportunity that Mrs. Thatcher championed back in, it's going to take some cultural change. And some of that's going to be a little bit uncomfortable. But unfortunately, it feels like whenever we come up against anything uncomfortable, somebody caves and doesn't actually follow through and be bold and radical like Mrs. Thatcher would have been. And there just needs to be a huge change.
Torsten, surely getting rid of the, yes, absolutely, applaud that. Torsten, surely getting rid of the...
We'll draft Tracy. I think someone's auditioning for that role.
On pension contributions was a pro-growth policy. I know you were critical of that. I'd be interested in your thoughts.
Well, I don't have loads interesting to say on that. I mean, yes, it's not, on the balance of judgments, it's not the one I would have taken. I've talked to the Chancellor about it. Regional people will come to different views. I think it's a very, very, very expensive way to get some consultants to stay in their hospitals, but I want to keep the consultants in the hospital, so the objective is a good one. It's not how I'd have gone about it. I'd have changed their contracts, but we're now in the weeds. So to get us out of the weeds, I was going to maybe suggest why Rishi Sunak isn't a socialist, despite what I keep hearing people accusing him of, which I think is just really important for everyone, but particularly those of you invested in this government to focus on why are tax rates really high, okay? And it's not because Rishi Sunak's a socialist, despite what seems to be like the memes I see now and again, and I don't think Jeremy Hunt is either, okay? So the question is, what is it? And the answers are Boris Johnson plus debt interest payments, okay? And the reason for that is the two big things, we've put up taxes by about 4% of GDP, yeah? This government's putting up taxes by much more than Gordon Brown ever managed. I know you're all very happy about that. But you've got to, when someone's doing something you don't think they were probably wanting to do, let's try and understand why. And the answers are, one, in 1819, we hit the peak of austerity for day-to-day public service spending. And the political judgment running into the 2019 election and beyond is that that was not economically, socially, or politically sustainable. And so we've then increased day-to-day public service spending by about 1.5% of GDP. Has anyone in the room, put your hand up, tried to use the NHS recently? Okay, well, some of you, that's a lot of private healthcare. Anyway, that wasn't my point. The point I was going to make is, if you have gone and used the NHS recently, what you would have discovered is that probably that 1.5% of GDP, it's not like that was too much, right? So Boris Johnson, that's because that was his judgment, and I think it's also the judgment of the people running the party and the government today. And the second reason is, bad things have happened, interest rates are higher than we thought they were going to be. That has put up our debt interest bill by 1.5% of GDP, without going into the weeds, because our debt interest bill is particularly sensitive to interest rate rises. That you can't get rid of that. You've got to raise taxes to pay for it. That is what we are, or cut spending further, but see me on point one. Those two reasons, and the bad weather, are why tax rates have gone up by about £3,000 per household. You might not like that. I think there's a completely reasonable judgment to be made about how high you want taxes to be, what's a sustainable level. But if you want them down, you've got to wrestle with why did they actually go up? And it's not because Rishi Sunak is too lefty.
Torsten, that strikes me as an answer as to how you make the books semi-stack up. Of course, we're still running a near record high deficit. To say that if you want to make more spending promises and pledges, you have to fund them, strikes me as actually quite a conservative line, one that Margaret Thatcher would have supported. That's slightly different, though, from actually getting results. I suspect the people who put up their hand here saying they've tried to go to the NHS recently might be thinking to themselves, they could be thinking a myriad of things. Maybe they think it's underfunded, maybe they think we don't have enough workers. They might also be thinking money in and of itself is no longer the answer to this. Are we really going to get the opportunity economy by shoveling even more money into a national health service that is on the brink of becoming the UK's national health service with a government attached?
Well, I mean, there's a number of things. That's a big question. That's a legitimate political discussion to be had. We are not going to have that conversation because I don't think, I mean, Andrew may want to tell me otherwise, but I don't think you're about to have that conversation. And I'll just tell you, like, it's fashionable again in like the pages of the Spectator and from some bits of the right to focus on reform of the NHS, but without saying what is the actual proposal for doing something differently. So what is actually you want? You can definitely.
Well, there's so many. Well,
I
mean,
I know,
all over
but
the world.
let me make the point. Let me make the point, which is there are judgments about where the balance between individual and collective provision lies. Right? That's what you mean if you mean I want the state doing less of this business. But remember, like, this is a party and a government that's wanted to extend the state recently. Extra childcare, free provision, social care, attempting to cap the cost that private households bear, very popular with the average age group who are Conservative Party members. These are extensions of the role of the state. They are not rolling it back. So let's just be honest about what is likely to happen. What is the revealed preference of Conservative government in recent years? And I'll just finish a story, which is I'm a governor at my local primary school, okay? All primary schools around me will be setting deficit budgets this year. Almost every single one will be setting deficit budgets. Why are they doing that? Because we've promised teachers pay rises and not funded them. Again, for understandable reasons, the country's become poorer. The public sector's wrestling with that in the same way that we all are as individuals. But that isn't about reforming those primary schools. We're going to let some teaching assistants or some teachers go to balance those books over the course of the next 5 years. So it's about real choices. It's not just about saying the word reform and hoping the things. You don't reform your way out of that debt interest bill. I promise you.
Andrew, very quickly, because I want to bring in Chris.
Yeah, just very quickly. We don't have time for the whole debate, Torsten, but we do have to. Anyone in the public policy domain does have to confront the fact that we have decent, not strong enough, private sector productivity, but what's actually holding a large part of GDP growth back is public sector productivity, and we owe it to ourselves.
Only in the
We owe
recent
it to all of ourselves to have that debate. The Chancellor has asked the Chief Secretary to go through and work with colleagues across government on productivity, and we just can't, as a society, on the one hand, talk about and embrace and relish the opportunities presented by new technologies, by artificial intelligence, by high process compute and all these other innovative tools, and not then also seek to apply those to the public sector. Now, how we do that is a conversation that's longer than for today. And just one final point, because I think it speaks to what Tracy and Torsten have been talked about. In the financial services, right, so my bailiwick, if you like, the domain of where we're sitting today, we are applying a new duty. Parliament is applying a new duty. This is a radical idea to promote the economic growth of this country and its international competitiveness. And though that duty won't be right for every single public sector service, there is the germ of an idea there that if we can do it, and Parliament's doing it right now, in very big financial services sector that touches everybody's lives, perhaps you could go back through and look at many of the other regulators that have huge power over society and do have this, important view on risk, and potentially apply it there. So I'm going to head down, go and do that in the financial services sector. That's what the Prime Minister and Chancellor and I are very focused on. But maybe there's a thread there that's a bit less reductionist than just debating.
Chris, I want to bring you in and I want to talk about tax, because Tracy summed it up really nicely when you said, when you bring in windfall taxes, have the tax burden at a post-war high, and then make it nearly impossible to change anything with planning and to build anything new, whether that be homes, new energy, whatever it may be, you find yourself in a very difficult position promoting any kind of economic opportunity. And I think there might be some debate here on the panel, because Torsten, I think, has made the important point that if you're going to have all this additional spending, not on COVID anymore, for domestic policy, for childcare, the rest of it, you have to pay for it. International markets have demanded higher borrowing costs. We're going to be paying for that. But if you start to break down what households are paying, it is not the way we would have designed this system. I think we calculated last year at the autumn statement that a young professional, maybe in their mid-30s, earning £50,000 a year, who still has some kind of student debt, is paying a marginal tax rate of 51%. In what world is that going to be appealing to get more people to come to the UK? In what world is that going to be appealing to make our young people stay here and work hard? The tax burden and the overall tax system has to be up for debate as well.
I think that's a good point, Katie, and I think we do need a goal of an internationally competitive tax regime. It can't be necessarily established tomorrow, I get that in current economic circumstances, but I do think we need government to set out how we get to an internationally competitive tax regime. If you go back to what Margaret Thatcher would have been saying about a low tax economy, about getting back to a low tax economy, not something we can do at the present time. How do we do that? Well, part of the way we do it is by getting growth. Growth is fundamental to doing that. So how do we get growth? And for me, it's about, I absolutely agree with Tracy, the appetite for risk in this country today is almost zero. Yeah. And until we start to break that culture, and actually we start to incentivize, Minister, those businesses who will take sensible judgments about risk, and until we break down regulation to be not a constraint to growth, but an incentive to drive growth, we are always going to go round in this economic circle all of the time. So, my thought process is really simple. We have debt at a huge level at the moment. We know why we have debt at a huge level. How do we get from there to a society and a country that incentivizes people with lower taxes, incentivizes growth, incentivizes risk-taking, make sure that regulation is proportionate? We do not want to race to the bottom. We do want proportionate regulation. In the Financial Services and Markets Bill, there is a secondary clause for the regulators to promote competitiveness and global competitiveness. Nothing more important, I would suggest, than us promoting global competitiveness. But I've yet to understand how that's going to happen. I'd love to have a regulator in the room stand up and tell me today, what are they going to do to drive that? And I've challenged, I say that to the government regularly. How is it going to happen in practice? So we're in a position today where there's not a lot of flex in the economy to suddenly slash taxes. I absolutely understand that. But the government needs to set out a long-term plan centred around growth, centred around incentivisation for taking risk as to how we get to an internationally competitive tax regime.
Tracy, that word risk is so key, and you brought that up as well. Is this part of the reason that younger generations are just not achieving the same level of financial success? That it fundamentally comes down not just to appetite of risk, but the ability to take risk, given the fact that there has been a lot of regulation since the crash. Again, we can say very well-meaning in principle, but not necessarily leading to the economic circumstances where we can see meaningful growth now.
So strangely, the younger generation is quite happy to take risk. 25% of the population now owns crypto, right? And I expect most of that's in the younger generation. In me talking to some of them about what they'd like to invest in through DC pension schemes, et cetera, they said, we'll be really happy to invest in fintech or biotech or whatever it is. But all the regulation there doesn't necessarily allow them to. So that's the risk-taking bit. I think on the other side, though, all the things that have been put in place, planning, regulation, et cetera, just makes things so difficult. So housing, housing is a huge part of it. If you want young people to have a stake in society and be capitalists and really believe in it, they need to have housing, they need to have wealth, and they either get wealth through housing or through savings. There's no other way to get it. So savings, we're doing something through auto-enrollment. We need to connect them with that savings. We need to get them to embrace that risk culture, which they're quite happy to do, and then allow them to do it. And that is somewhat lacking. And then the housing thing is a big deal. It is shared between government, but also local authorities, and the whole attitude about all of that in there. But we need to give the young a stake, and once they have a stake, then they'll buy into the growth story. But until they can get a stake, then it's going to be pretty difficult.
Torsten is shaking his head at crypto.
Just stop it.
Yeah, I agree. That's not the point. The point
So,
was
I
risk.
love, you look at it, there's a great survey by the FCA, which is, with Andrew's help, now regulating crypto. Leave aside what regulating means for a second, but regulating crypto, which had a survey, and we're regulating it as a financial product to a degree, but had a great survey of asking the people, which is where the 1 in 5 or 1 in 4 investing in crypto. So it said, why are you doing it? And although we're regulating it as a financial product, like 50% said they're doing it for gambling.
Yeah. But they're willing to take risk is the point.
No, I agree with you. I wasn't shaking your head at your point. I was shaking my head at society.
Yeah.
But on the point I would worry less about young people's appetite for risk. Their problem is not that they don't want to take risk. The problem is they just don't want to pay such high rents. I don't want to sound like the Marxist here, but the economic fundamentals matter. Younger people are more concentrated in lower paying jobs, have seen weaker pay growth than their predecessors, haven't been handed a house on a low value that they then see their mortgage payments fall at, while they get handed, as almost everyone looking at the average age group in this room has been, huge free capital gains, totally tax-free, over 30 years. And unsurprisingly, they're a bit pissed off in that world. It's not about the risk appetite. The problem is society's not giving them a fair crack of the whip.
Andrew, how's the government going to handle this? Because if we go back to when Boris Johnson was Prime Minister and Rishi Sunak was Chancellor, it was very telling that when he was trying to target workers, when he was trying to target tax breaks, he was very focused on the lower paid. He was trying to reform universal credit, make it pay to work, and all the rest of it. I mean, has the government lost its way a little bit, just as it's been so focused, understandably so, in trying to make the public finances look better in the wake of higher interest rates, that it's lost its way a bit on what the tax burden is actually doing to your average family?
No, look, I think no one who's stood for election in 2019 came in with the foresight of where we are now. The Prime Minister and the Chancellor have both been clear that reducing the burden of tax on individuals and businesses is a when, not an if. So there's no change from the philosophical desire for Conservatives. Torsten set it out well. I mean, we have to build the house of opportunity for people on firm foundations, and that's what we've got to do, and that's why we're making tough choices. But this is, in many ways, a great moment to be a young person. Disruptive technology, can be a great leveler. It can be a great way of preferencing the young versus the incumbent. There is a huge piece about a mindset that does let people take risk, that celebrates those who are successful at taking risk, and even when they become wealthy, not buy into what we hear about from the BBC or others every day about trying to drag people down. If you grow the overall size of the cake, as Chris said, that is how we're going to be able to grow the economy, give people opportunities, and reconcile that with the state of the public finances, which is the challenge of our time. It's the challenge of every Western European, every Western society, is how do we go back to the world that existed 30 years ago, where people had a legitimate and a confident belief that their children would be more prosperous than they are today. That is about comprehensive reform of attitudes, of supply side, all of the work that has been done, and the government's certainly not setting its face against any of that. These things just take time. I would argue that the planning reform bill actually has within that lots of supply side measures that will get the nation building again. And again, I think it's a mischaracterization. Certainly the financial services bill, and it's not just about some esoteric piece about how a city bank is regulated. It is about how young people have access to credit. It's about, can you get a mortgage? We've got a big number of people who are paying more in their rent than they would be if they were able to get a mortgage. That is the nuts and bolts of financial regulation. That's why it's a great opportunity to have taken our own rule book back from Brussels. And if working with the regulators, we can change some of those risk parameters. It has to be a conversation with society. It's not about what Andrew would do or what Katie would do. We have to bring society with us if we're going to get that balance right.
We have just a few minutes left. I want to ask each member of our panel one more question, also give you a minute just to wrap up, but truly 1 minute, because otherwise we're going to run over and I'm going to be in trouble. But we've spoken a lot about an opportunity economy, what has to change, what the challenges are. I want to talk about where it has to change, where we need to be better at distributing opportunity across the UK, how that's changed in recent decades. I will not be upset if we never hear the phrase leveling up again, mostly because I still haven't been told what it means. But the concept was a very important one that has been lost, I think, over the past year. So maybe focus in a little bit on where you'd like to see these changes as well as what these changes are. Any last thoughts? 1 minute each. Chris, I'll start with you.
Okay, so the principle of levelling up is important, and we shouldn't lose that, and we should ensure that the fact that the southeast economy and London has had the advantage both in wages, productivity in recent years, that needs to be spread out across the whole of the country, and that I think is a challenge. But you don't do that, in my view, by reining back the growth in London and the southeast. You use it to stimulate opportunities elsewhere in the United Kingdom, and we've seen greater capital flows, business investment into the bigger cities. But what you mustn't leave behind are the other towns and the other parts of the United Kingdom for whom it's not so easy to be a Birmingham or a Leeds or an Edinburgh. How do you stimulate the growth in those areas? And I think one of the ways you do it, to be my final point, is you do it by continuity and consistency of policy and planning. We've touched on these things in this debate this afternoon. There needs to be greater confidence. You build confidence in the country so that people see the continuity of those policies and they feel more prepared to invest and to redistribute the wealth across the nation.
Andrew.
Well, Arundel and South Downs. Where do we do this, right? I tell you where we do it. We do it in those, little one-person business hubs. We do it on those unfashionable trading estates that every single part of this United Kingdom's got, where you've got an entrepreneur, a young person, an old person, but somebody who's got an idea for a business. We make sure that they've got the capital, that we don't strangulate them in red tape as they go through that really fragile, process of birthing their ideas. And we unleash the nation's entrepreneurs. We need a proper enterprise revolution. And yes, others need to do their job, but ultimately that's where rebirth, that's where growth comes from. It comes from great ideas, we give people the backing, we've got the societal attitude to risk to back people, to celebrate when they succeed and let them keep wealth, but also to celebrate when they fail and give them encouragement to try again. If we can do that, then every single part of the United Kingdom will be buzzing with lots of enterprise, and that's how we're going to grow.
Tracy.
So we invest all over the country, and we are constantly looking for new investment, and it's quite difficult. You know, there's not a huge amount of ideas coming our way, which is why we're trying to generate ideas by getting people to work together and talk in terms of local authorities, in terms of what works and what doesn't work, in terms of attracting capital and planning, etc. But there's so much of this that comes from vision at a local level. So we've seen a huge change in places with, say, combined authorities, with mayors that are really forward-looking and have a vision and are thinking about the future and thinking for the long term and have a plan. We need to infuse that through the rest of the country, and that's one of the things we're trying to do, to get some of those ideas shared across the rest of the country in terms of getting some of that vision of how they can improve their local economies and where it can go. And it's part of that's just a conversation, and part of that's a culture thing of getting it spread out throughout the country.
Torsten.
So gaps across our country obviously are large and are persistent, particularly on productivity, particularly on wages. Gaps on employment actually have come down significantly over the course of the last 2 decades, but on productivity and wages, they are large by historical norms and by historical norms in the UK. So personally, I'm fine to keep hearing about levelling up for a bit longer. It would just be nice to get to what the concrete direction of travel of an actual strategy to bring those down sustainably is. And there, what you were hearing about earlier, I think from everybody here, which is that Britain is overwhelmingly a service economy in terms of what we trade. I don't mean, obviously we're a service economy in terms of the entire economy, because there's loads of non-tradable services going on. Now and again we all get a haircut, but on the tradable sectors we are very unusual in how service focused we are. So take that nugget, that tells you that the route to a meaningful levelling up strategy in a UK that looks like it does, rather than the one you imagine in your head, is the large cities, Birmingham and Manchester, which are big and much less productive than they should be as big cities. It will be a service-led strategy that makes those places more highly productive, and that is the only plausible route to closing the regional productivity gaps in Britain. There's not some other one, which is why we end up talking about high streets instead of actual productivity when we talk about levelling up. Whenever anyone says, oh, but Manchester's already doing really well, what about everyone else? I say, what you mean is you've seen some construction work in the middle of Manchester. Productivity in Manchester is well below national average. Manchester, right, not Greater Manchester, Manchester, well below average even in the centre of the country. It is grown roughly in line with the national average, a bit higher for the last 10 years. There's not some kind of takeoff going on. The poorest place in Greater Manchester isn't Oldham and all the ones people talk about. Central Manchester is the poorest place in Greater Manchester, right? So when everyone tells you, oh, it's already going really well, we just need to share it out more, it's nonsense. It means they haven't paid any attention to what is actually going on. The poorest people in Greater Manchester are in Central Manchester. Your strategy has got to start from a productivity strategy rooted in your big cities, because cities don't change their populations fast, so you've got to make Birmingham and Manchester more productive, and it will require huge change to make that happen. Levels of investment, change in higher population, more house building than is currently planned. That is what a genuine levelling up strategy. And then you have to say, right, but we're not just about productivity. Okay, we're also about all parts of our country being good places to live. Yeah, we don't need to have this thing where the only high status jobs are the tradable jobs. You need good jobs in every part of our country, which means having decent employment laws, actually enforcing them. Obviously, we don't do that. Anyone that's been into a hand car wash, anyone who's used a hand car wash recently? Anyone put their hands up? You're either lying or very unrepresentative. Okay, you've all used hand car washes, come on. There's no way most hand car washes are economic in this country if we're applying our labour laws, that they're paying the minimum wage, that they're doing anything. There's no way. It's completely impossible. It's uneconomic, right? Do we do anything about it? No, because we're all enjoying having our cheap car washes. So you've got to do that, good places to live and good jobs, and those are about every place. Those aren't just about the big cities. But you don't rest your levelling up strategy or any other economic strategy in wishful thinking. They've got to be grounded in, understand what the country's like, a service-led economy, understand what that means is possible. Your big cities could stop being low productivity, then start building out from it. Wishful thinking gets you nowhere.
Huge thanks to our audience. Thanks for your feedback as well. This has been a very fiery discussion and a very enjoyable one. Thank you to everybody watching at home and at the office. You have a 15-minute coffee break now where you can continue this debate with each other, perhaps come up with some more ideas for how we create an opportunity economy. I want to thank again the CPS for hosting this debate. Please enjoy the rest of the Margaret Thatcher conference, and please join me in thanking Chris, Andrew, Tracy, and Torsten in the usual way.